Alrighty, Doc here from North America. More action than we were expecting. Uh-oh. Are the governmentals trying to take the markets down when it's so thin so that they can buy and then they'll just panic them up again? Uh-oh. That's what it looks like, honestly. I mean, in a thin market, and, just to start off with, not counting the fact of, where's it at here? Let's find it. Let me see. I'll also check the, make sure that, okay, there's sound there. Just double checking the sound to make sure I am 5x5 electronically. Yep, there it is. Okay. So, yeah, what is that all about? It's like, uh-oh. Check this out. Here's the Dow Jones Industrial Average. Was down 900 points. I mean, it looks like, well, they need Christmas money, and so they'll take it down on thin markets, if they can get in without it exploding, there it is right there. You can see that's today, right there. I mean, we haven't had something like that in a while, that's for sure. There's one right there, and what did they do when they did it that time? Oops, it went back up again, 2,000 points. Oh, excuse me. How can you do nothing but laugh at this craziness? The central banks are plowing $120 billion in. No, wait a minute. Excuse me. The Federal Reserve is plowing in supposedly somewhere between 105 and 120,000. Billion. I'm sorry, 120 billion dollars a month into the marketplace. The European Central Bank is doing 60 billion euros a month. How are we supposed to take this? So the guys on the trading desk just realized, shoot, man, did you do the shopping? Did you realize how much things are? Oh, man. I mean, are they, coming to this epiphany? Uh-oh, maybe we need to get some spending money besides the bonuses that the Federal Reserve is going to give us in quietness. So, I don't know. I mean, that's what we're seeing here this morning. Let's put it up on, there's the J4X. I got the Dow on the J4X. Let's put it up on the, where's it at? Right here on the Chicago Quant. And it will just emphasize it even more, if not the same. Let's put it that way. Right there. Oops. So the trading desk realized somewhere last night that, guess what? If we put a rumor out there that the variance is worse than ever, then maybe they'll knock it down, and all of a sudden they'll realize, oh, maybe we're wrong, it doesn't mean as much, and then they'll bring the market back. I don't know. How else can you look at it? I mean, I don't trust any of it anymore. If they didn't plow in 120 billion a month, in the European Central Bank, ECB didn't plow in 60 billion euros a month into the marketplace, then I wouldn't think crazy ideas like that. If they were paying interest on 15 trillion, in other words, the ECB has, and around the world overall, like Germany and so forth, overall have 15 trillion in bonds outstanding, and the customers who bought those bonds from the government pays the government interest. If they didn't do that, I wouldn't come up with stupid ideas, what I just said. I wouldn't. There's no way in the world I'd say that stuff. But when they're doing that, why not? I mean, every month, 180 billion of some fresh cash that doesn't exist is printed or electronically, on a balance sheet put in, and they go out and they just buy. And this is government agencies. This is quasi-government agencies. I mean, if this didn't happen, then why would I say crazy things like, could they just want to take it down so that they could get some Christmas money? I mean, really, we've seen so much abuse that it doesn't really, it does not take what I said and make it unrealistic. It actually makes it realistic. And so anyway, that's where I'm at. And we're going to send charts out today too. We are going to send them out. we weren't going to send them out. But when you have when a move like this occurs, you got to send them out just for the sake of for people to get a flavor of it all. Who knows? By Monday or Sunday night, this thing could be literally up here. It could be literally up there, and if it is, everybody's going to be like, "Oh my God, this is insane." Maybe the daily quant and gold moved back into a buy. It did. We're going to send that out too. Here we go. It is there, but silver is having its issues. There's the gold. You can see that the line is through. This is through. We've stayed in the weekly, so that's fine this week. Let's put it up on the J4X real quick for you. Real quick, like a bunny. Right there. Let's move it over. There it is. See, it's doing a little bouncy bounce here. This is not getting up yet, but give it a couple more hours and it will. And then middle age. Check this out. Now this is the I think I'm crazy type of chart you look at and you go, what is their malfunction? They're silver. It's barely budging, barely budging. I mean, gold is only up like $30, but that's like what did they do wrong? Why don't they like silver? I mean, it all seems construed. You know, in other words, it's there it is there. You know, it made this big low. It is trying to get through. You can see that right there. It does look like it's going to go into a weekly sell. Why is silver not as valuable as gold? Not, I mean, in other words, why aren't they buying silver? If this is, oh my God, the world's coming to an end again, why aren't they buying silver? Why isn't silver at least $24? I mean, it can't even get up to $24. They hate silver. Yeah, I know. I hear you. I think they're spreading. I think it's just like a pairs trade. I think they're buying gold, selling silver. I don't think it's much more than that. So, yeah, that is wild, wild, and wilder. And all we can do is look at it and just shake our heads. And then when we look at all this action that we're seeing, then we know that there is some real dysfunction going on there. You know, in the sense of, you know, again, if they weren't plowing all these billions into the market every day, right? You know, got to figure 180 billion. So, you know, you divide it by 20 trading days, right? So divide 20 by 180 billion. So, like, you know, what's that? Somewhere's around 8 billion a day. You know, I mean, that's a lot of money to go into the market every day. And you can't make this stuff up. I mean, it would be something if it was, you know, like, well, you don't really know that. No one really, you know, is confirming that. It's like, no, guess what? They do confirm it. They talk about it all the time. The Federal Reserve doesn't. But they do it in a very quiet way. When you tell the normal people that are not traders and they're just like, you know, just sitting around talking, and you tell them that, they go, what? What are you talking about? They put out $120 billion a month. What is that stuff? Don't they do some quantitative thing or something? What is that? You know, it's a real shake your head moment all the time. All right, where we started off right off with the stock market and the metals complex. Let's jump over to the currencies because guess what? Surprise, surprise! They are selling the dollar a little bit today. It's like woo! So I guess they really want to rake in the do-re-mi because you know, we don't really believe that that's going to have much of an effect. But let's just show you. Let's see, where is Mr. and Mrs. Mouse? There it is, right there, and let's put it there. Let's go to there, and let's go like so. There is the Swiss, right there. Look at the size of that little drop there. They're going to back down to the range that we talked about on yesterday. They're coming back to it, and you can see the weakness on the daily. The weekly's holding up pretty well. And let's put her up on the J4X. Right there. So they are selling some dollars today. I guess they want to buy them cheaper. I guess that makes sense, right? Or is that a lack of confidence of the whole world system, and money is running to the home countries again? I have no idea. We will know over the next couple of days watching the math. The math will tell us. The math will keep us honest in the end. But since this is a very, very, very thin day electronically, like it was yesterday, we have to, be careful here. Watch this and see how they finish it off today. If they cut the losses by half or something like that, or even less, and then Sunday night they open them up like 200 points, and all of a sudden you're scratching your head and you're going, wait a minute, shouldn't I have been buying instead of selling? I could have used that Christmas money too. Yeah. Middle age, you can't even make this up, can you? I mean, in other words, you couldn't invent this. I mean, if they weren't doing this, you couldn't come up with this idea. No one would believe it. I think that's what they always say. Like, sometimes you hear people in the financial community go, "You can't make this stuff up." And what they mean by that is, if the central banks weren't doing this, you couldn't create a story claiming that they might do this someday. That's exactly what they're saying, and I'm going to repeat that. So, in other words, when you hear all these, intelligent money managers and people involved in the market and that follow the markets for decades upon decades, and they laugh at this stuff. They go, "This is insane." They say, "You can't make this stuff up," and it's because what they're saying is that if the Federal Reserve and the ECB and so forth were not plowing this amount of money into the marketplace as a responsible money manager or investor or news reporter, you couldn't make this story up because no one would believe it. And that's why they say you couldn't make this up. It's just impossible. I mean, I remember, I can tell you this, as someone who spotted the Federal Reserve plowing money into the market back in 2008 and 2009, and everybody was saying, no, the Federal Reserve doesn't do that stuff. Before they declared that they were doing quantitative easing. I guess that was late 2008 at that point, doing the quantitative easing. I saw that going on, and people were saying to me, you can't say this stuff because people think you're like crazy. And years later, they say to me now, "How did you spot it?" I said, "I never seen money act so stupid in the trading, day-to-day, intraday trading. I never saw money in 40, back then it was 35 years, 32 years. I never saw money act so stupid." So in other words, if a product was going up and sellers came in, they would let it fall back to a couple of low resistance areas. But all of a sudden, it didn't. Money came in and they would buy again. They refer to it as cannonballing, like young kids running off of a diving board and at a swimming pool and then jumping in and doing a cannonball and making a big splash. They refer to it as that on Wall Street, cannonballing. And they used to say, cannonballing is a really stupid strategy. And I would see this go on in the evening, and I go, this is insane. Who in their right mind would have the capital to do this? And I thought, and after weeks and months of it going on, I in the back of my head, I always thought it had to be the Federal Reserve, because there is no money manager that would do this on their own. There's just no way, because they would lose their fund. They would go out of business. And so, I knew it wasn't like one or two wealthy investors, or a group of money funds, or hedge funds. There's no way they would do this. It's too stupid a strategy. But I thought, who could do this? Only the Federal Reserve. And sure enough, now we know it is the Federal Reserve. If you would had to tell me that this 30 years ago, I wouldn't have believed it. I hear you. No, I hear you. I know. When I told people 13 years ago when it was starting, before the quantitative easing was announced, people said to me, you can't tell that to other people. You can say it to me because I know how smart you are, but you can't say that to other people. They're going to think you're crazy. Yeah. I remember talking about it on Top Step. That's why I left Top Step left me and I left them. They wouldn't accept the things I was saying at all. And then they started looking for reasons to get rid of me. And, and I went to Dukascopy because Dukascopy was open to the idea. And here I am, years later, doing Dukascopy. And that's the reason why. It's insane. All right, let's go back over to the currencies and see how all the pairs are moving. And you can see, look at that long drop there in the Hinky. You can see it here with the Chicago Quant. Let's take a look at the Euro. The Euro is doing the same thing. It's lifting up against the dollar. Right there. And that's what we talked about. We figured this line right here, the little blue line, the 23, would bring it back up into this range. And sure enough, they're getting their Christmas money that they need. Let's put it up on J4X. Right there. Yeah, this is I remember at a swim meet about 5 years ago. I was talking with a history teacher at this private elite school, and I was mentioning to them that there was talk at the time to go minus in the interest rates here in the States. And they said, I don't understand. And I said, yeah, they're talking about, following Europe. And he says, I still don't understand. What do you mean? I said, well, Europe right now, if you buy, like a treasury note or, a bond or something like that, you pay interest to the government. He said, no way. This was a history teacher at an elite private school where you pay $50,000 a year to put your children in. $50,000 each. So you pay $100,000 to put your 2 kids in those school, and the history teacher, head of the history department, I'm telling him about negative rates, and he's saying to me, I don't understand. I was like, yeah, see, they're talking about making interest rates go minus here in the States, and he goes, you're telling me that I will buy, my pension will buy a bond and I have to pay interest at the same time? I said, yeah, that's impossible. I said, no, they've been doing it in Europe now for 8 years or 7 years or something like that. He goes, no way. I said, yeah, way. Yeah, way. All right, let's take a look at the British pound. Right there. And you can see same situation going on. They're buying pounds and selling dollars in a very thin market, so it'll be very interesting to see. And there it is right there on the J4X, doing the same thing. Hasn't turned up yet, but it will. It'll catch up with the Chicago Quant. Just give it a couple more hours. It'll start to perk up its head. Let's see, what's next here? Let's see, I do have that on there. Yeah, okay. So there, we slide over to the Turkish lira, which fascinating, if nothing else. And my condolences to all the indigenous of Turkey and their currency going in this fashion. And you can see here, we're looking at highs now above the 13 4 days ago. You see yesterday incredibly dead, but today they're starting to lift them back up. But the pressure is on here from this action right there, those 2 days. Weekly doesn't care. Weekly don't care. You can see that. It just keep on marching north. Just keep on dancing its way. Dance the night away up. Let's see what it looks like. We're going to put the Euro Turkish Lira on the J4X, and then we're going to put it up on Chicago Quant first. Like that. There's that, and let's jump over to there and do this. Where'd you go? Right there. And so, the Turkish lira is still in the 13s, and the high now, the all-time high is 4 days ago. What is that? That is 15.21.9. So it's almost 22. 15.22. So we've seen that product go from 1.5 to 3, from 3 to 6, 6 to 12, and I'm not sure if we're going to see 24 somewheres over the next year or so, or are we going to see let's see, half of that? What would be half of that? It would be 18, right? So maybe we'll see 18, and then we got the 15.20, 22. So what's 18? Just three more three big handles more. And so that's the action. That is the action. And there's no stopping it. It just seems like the glide path is that away. Just up, up, and away. And like we said over the last month or so, we've really become convinced now, I guess over the last 2 months, that the glide path is this way more for them to deal with the European Union than for them to just pull investors into the country. I think they're just trying to find an area, price range, where it'll make everybody happy. What price to do it at, So that is what it is. What it is what it is. All right, now let's see what else do we got going on here. I guess that's the Turkish lira. So what we do is we usually slide over to the Canadian right here. The Canadian tried to take it down yesterday, but look at that. It couldn't. Okay, it did. Yes, it did. That was a red-green there for a little while. So I'm a little confused there. We're considering this all just one long buy still. Still marching up. So because that was actually Thanksgiving itself. An incredibly thin day. So it's hard to take that too serious. That is one of the concerns we always have in this marketplace over this holiday specifically. We steer clear of doing charts for a day and a half, because they're usually very illiquid charts that have odd moves. But when you have a Dow that almost has dropped 1,000 points, you gotta start to put out some charts. Now we don't have any of the grains going. None of the grains are really moving. We're not seeing that yet. They're not trading them. I don't think they trade them. They shut them off on Wednesday, and none of the grains trade again until Monday night or Sunday night. So that's just part of the only thing we really have going on is bonds and currencies, and bonds and currencies. That's pretty much what it comes down to. And stocks. I'm sorry, bonds, currencies, and stocks. Stock indices. So it's just that combination. All right. Let's see what else we got going on here. I just want to save something here as we're talking. Yep, there we go. And then from there, what we do is we always go, with the Canadian. Since the Canadian is rising, we're assuming that the metals complex is down. Now, we've already looked at the metals complex to some extent. So what we're really thinking at this point is that we'll take a look at oil and gold and so forth again. But what's very clear is that that complex itself doesn't have much interest in altering, adjusting, because it's the holidays. So it's not much. I don't again. I try not to trust these numbers, but you got to follow the numbers. So let's go over to that and take a look. We saw. Let's see, where's that? Let's put it up. We had J4X on silver and gold. So let's go right to the energy side of it at this point. Right there. There's the light sweet. Put that up on there too. Light sweet. And you can see there, they've taken that down also. Let's see, I hope the sell-off in the indices won't affect the grains. They're not trading at the moment, so see that right there. You see that that's deck corn. That's Wednesday. There's no trading at this point. I normally because I always say that I believe that the grains and the commodities and like that are governed by being denominated in dollars. I'm sure it'll have some effect. Because I think there are groups out there trading this stuff for only one specific reason, and that is for dollars pair. Now that we have inflation, you can see the way the commodities have lifted, and because of the inflation, it has makes you kind of pay attention more, I guess you could say. In other words, they're out there trying to buy this stuff. They're not that fast to give it away. Let's put it that way. But no, there's no trading today. They shut the commodities down until Sunday night, so we won't see what's going on with them. That's why we try not to send out charts. We try not to send out charts because there's no update on the corn and all that stuff. All right, let's see, where do we go from here? But I'm sure there will be pressure because it's dollar denominated. And again, if we walk in on Sunday night and the dollar is up and everything's back down again on the currencies, it doesn't matter if the stock indices are getting hit still, or they only gain back 50 or 60%. They'll probably open up relatively flat, the grains. We'll have to see where the currencies are. Sunday night, as we take a sip again of our tea. All right, now, where do we go from here? Let's take a look at, we saw silver and gold. Let's take a look at copper. Wow, that's something, isn't it? Look at the crude oil. 73, let's see, how much is that down? Talk about illiquid. So spot oil closed yesterday in the electronic market at 78.03 with a 78.65 high, and now today's low is 72.60. It's dropped $6. Why? Really? Why? Why would it drop $6? Honestly, I mean, more sellers than buyers. Obviously, that's the easiest and direct answer to that. But I mean, really, there's really that many more sellers right now. Is it really that true? Or is it just an incredibly thin market? I'll go with incredibly thin market. And gold, I'll tell you, if you're terrified of a product, think about this. If you're really terrified of, a product, whatever product it is, but if you're really scared about it, wouldn't you try to buy one side of it and sell the other? In other words, try to do a hedge like a pairs trade. So, I mean, I guess that's why we see gold up. What is that? Basically from the Wednesday close, 84.30, and today's high is 16.30. So that's $32, right? And right now, it's only up $20, so it's given up a third of its gain. And then you go and you look at silver, and you got to figure that they're buying gold and selling silver. I mean, there's no way in the world it's doing anything more than that. And silver is literally almost unchanged for the day. It closed, yesterday it closed at, let's look at it on Wednesday, but, closed at 23.50 basically, 49.5. And right now it's trading at 60. So we're talking 10 cents. That's it. And you have to assume that they are buying gold and selling silver because they're terrified. They know that the Federal Reserve is going to sit on that product. They know that it's going to be pressured, and you can see the weeklies already dealing with that all week long. All right. Let's see. Where do we go from here? I guess we go back over to the South African Rand. Let's see what they're doing with that South African Rand. Oh, copper. Let me just show you copper. Copper did catch my eye. Look at that. Right. They're just going to slam it like that for, it went into a sell on yesterday. And again, in a thin market, so who can trust this mess? But then they go and do this. It's like, what? It's like almost like as if the Federal Reserve is literally a subscriber to our indicators. Oh, we're going to be a subscriber to your indicators. All right, now, let's see, where do I go from here? We go to here. Get rid of that. Cancel. There we go. Let's take a look at the South African Rand. Right there. At least it's down a little bit. At least, look what they did with it yesterday. It took it up even more. So, the Rand, when looking at our math right here and right there, and looking at the Wednesday close, it's much higher and firmer. Let's see, right there. And you see it there on J4X, just all green. There just isn't much selling of this product. So they obviously, I guess, didn't we have like a $50 down day 2 or 3 days ago in gold? So, where's the buyers? Where's the buyers? They're all running and hiding. They're out there. If they buy it, they're going to sell silver against it or platinum. They're going to do something like that. And I think, let's just take a look at platinum. And platinum's probably, I wonder if that's unchanged or down from the day. Down for the day. Is it trading? Let's just make sure. Yeah. It's down for the day. And it's below the Wednesday close. So it has all the trimmings. It has all that look right there. Is right there. Oh, all right, let's go like that. It has all the look. Like, don't take the metals too serious, because if you do, you're gonna get your head handed to you. And that's it right there. All right, from the South African Rand, we jump over to the ruble. Let's see what the ruble's up to. There's the ruble there. And let's put it right there. Rub. It's holding up too. It's obviously it's higher than the Wednesday close. So, there is not a lot of follow through. There's not a lot of conviction. Nothing. Buckus. All right, now let's see. Not there. Let's go back to there. Let's take a look at the yen. There's the yen doing its little pounce down thing. Right there on J4X. Pressure Olay. See, it's trying to break down there. It'll catch up to the Chicago Quant. Or it'll rally it back up, and it won't. Next thing you know, over on the J4X, it'll never even reflect the weakness. Well, I guess it will because of the big red there, but we'll see. Okay, from there we go over to the Mexican peso. There, Mexican peso. Shoo. Boy, they jacked that thing today, didn't they? Yeah, we've been watching this expansion. just keeps on finding ways to go up. Look at that. That whole pocket there, broken the trend, and it's roaring up. They have issues. They have issues. All right. Yeah, I can see it right there, holding up really strong, and you can see it there on the Chicago Quant. And we're 1 full week in a weekly buy. I thought we saved that before. Didn't we save this? I could have sworn we saved that. Yeah. So this is going the second week in a weekly buy. Alright, so that completes our currencies. Now, if anybody wants to see like cable yen or something like that, just shout it out or whatever. Whatever you want to see. You want to see euros again, you're welcome to look at them again. We'll gladly look at anything anybody wants to see. And from here, what we normally do is now we start to inch our way over to the stock indices. But we even started off with that. So we'll take a magical walk down the stock indices trail to see what's going on there exactly. There's the Nasdaq 100. We'll start off with that today. It's not getting beat up as much. It's supporting this area here, the 1600 area, no problem whatsoever. You can see some pressure here. We're not really seeing it over in the weekly. The weekly, it has a lot of work to do to get it to go. The daily is minus at the moment, very little, but it is. And let's see, I'm going to save that because we're here. Now, let's take a look at the S&P 500. Much bigger drop, taking out the lows here, challenging this here, so it's falling harder and faster. And you can see the weekly has backed off. Let's take a look at it on J4X. Well, let's do NQs on J4X real quick too. Quick like a bunny. Right there it is, the Tech 100, that's the NQs. As it loads in. As it loads in, there's showing the weakness in. Now, when we go over and we look at the S&P 500 right there, and we look at it here, you see it has broken those lows. So they can see the action and the issues that it has. Right there. You can see, there it is right there. It's going back to weeks upon weeks, not like a week and a half. Challenging some type of lows in there. Back here. When was that? That was November 1st. So we are flirting with November 1st price tag. Now let's take a look at the Dow Jones Industrial Average right there. That's even bigger of a drop. And it's challenging, which lows? It challenged the October 15th lows. So, interesting, the bigger the index. Let's take a look at that on J4X. There it is right there. Exactly, you see the pressure on that. And then we're going to throw up one more, the Russell 2000. Put that up there. That is challenging. Let's see which lows is it. This low here? That low, this low. I guess it's challenging these lows, which is October 5th, 6th, 7th area. So this is even further back. You can see, what was it? Did we get into a buy? No, we didn't get into a buy. So we've been in a sell on this product. You can see that all the way through. I'm not sure what that. Oh, I see. That must have been flirting with the daily buy the day we looked at it. Didn't last, obviously. And so we've been in the daily sell now, all the way through. And we are flirting with the weekly. How was the? Let's see what the Dow looked like on the weekly. Same thing. Yeah, that's right. The Dow is 1 week in a weekly sell. That's right. So that is not that much of a surprise since it's been in a weekly sell for 1 week. Let's save that. Let's see, where are you? Right there. Alright, now let's shift up over to right there. Let's go to the intraday of those products and see their action. You can see the let's start off with the Nasdaq, like right there. You can see this product is down 158, trading at 207, and the low is 123. So it's 77. It's 80 points lower. This thing was 80 points lower at the London Open. That's pretty much where it was at. It was around the London Open time frame. So they really put some heavy pressure into that product, and it's they haven't really let go. They really haven't. They've just been pressuring it for the last 24 hours. Let's see, like that. There we are. Then, let's see, from there, let's take a look at the S&P 500 right there. And the same thing, now it's trading, you see it's down 75 points, basically 74.50. And the low, it's trading at 624, and the low is 597. So that's 27 points higher. I mean, that's, you when you see stuff like this, you just shake your head. It's like, really? They did that? And if they even dare to get close to plus over the next 2 trading days, Sunday night going into Tuesday, either way, Monday, Tuesday, wow, what will people think? It's bad enough now that they talk about it as a rigged game, but how much more frustration will there be? A lot, really a lot. Then let's jump over to the Dow Jones Industrial Average right there. And you can see here the product is trading at 34,991 with a low of 34,800 basically. That's 190 points of difference really. 189 points. And you can see how since the London Open right here, it's just been a sideways up action. Maybe it'll stall with the US Open and they try to take it down and do some quick profit taking, and then they'll be like, let's buy it cheaper, lower, and they'll try to go after make a new low or something like that, and then all of a sudden money will come running in. We'll see. And right now, this product, as you can see, is down only 767, where at one point it was down, let's see, it was at 802 compared to that. So it was almost down 950 points, just hiding away from that 1,000 point. They'll have to probably do that during the U.S. market, just to really shake it up. Let's really shake it up. Let's get it going crazy. Shake it up. It's the only way I can see it and understand it. All right. Now, what else we got going on there? So we've looked at the stock indices, and you can see, how much play there is in them. In other words, how much adjustments that could be made. And we'll probably see, as you can see there, the Dow Jones Industrial Average is chopping away. And, it's made that low at the beginning of the Frankfurt and, Switzerland and, the London Opens, that type of thing. We'll see how that plays out. Amsterdam, Spain, whatever, Italy, all the others. That's odd. That is what it is. All right. Now, I'm trying to think where else to go off to. We've done the stock indices. We can't do any grains because all that stuff's not trading. There's just not, there's nothing to be done. They know how to go on a holiday. They figure the cattle and everything don't need. They work hard enough all week long, every week, every month, as a farmer. So they've like, let's just close this market and just come back on Monday night or Sunday night, that type of thing. All right, we got to go find something. Middle age. You want to see anything particular? How about the Brazilian rail? Let's see what that's doing. Let's open that up. The Brazilian rail. What I think I'll do is this: is close that. You know what? I'll leave that open for a bit and just do it up here. There's the Brazilian rail. Now that will have a close of Wednesday, really. I don't think that they're trading it they may trade it electronically right now. It usually does get going right around now. So we'll see. And there it is. Right. We were looking at tips on Friday, or Wednesday. I'm sorry. To me, Wednesday was Friday. And let's see what the Brazilian rail is. Where's that? RAN, right? Or where is that? There it is. EWZ. Yeah. So they got it down today. There it is. So that was Wednesday. And now today they're starting it off down lower. It tried to climb into a buy on what's that called, Wednesday, but you can see we've been in a weekly sell in this thing for a while, all the way since July, since the 42 area, 41 and a half area, that type of thing. So we've been in a weekly sell from there, and now we are trading in the 29 area. And it's still in that weekly sell. Doesn't seem to have any interest whatsoever to straighten itself out. And that's definitely well worth thinking about, in the sense that the Brazilian real, how long has that been in a weekly sell now? Let's just count the weeks. Since March. Is that right? The Brazilian real's been in oh, that's a weekly buy. Where's the weekly? Oh, there it is. There's the weekly sell. July. So we've been in the weekly sell since July. So all of July, all of August, all of September, all of October, and almost all of November, right? Yeah. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 starting off in September. 10, 10, 10, 10, 10, 10, 10, 10. 11, 12, 13, 14, 15, 16, 16, 17, 18, 19, 20, 21, 22, 23. Let's just double check it going in reverse. So there is 4, there's 5, 6, 7, 8, 9, 9 up to October. 9 up to October. 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, and 20. 20 is 716. 716 right there. 21 and 22. So 22 weeks in a weekly sell. Let's see. Tags a grain fund or DBA. Let's see what that looks like. Don't we have one? We have one of those in there, right? Isn't that the AG we watch? Oh no, AG is a metals one. That's right. Let's find tags, or what was it? Tags or DBA? We do DBA. I know that. Let's see. Where do we find that? There's the Nifty 50. Let's do this. Put it there. Let's see. DBA, I think that DBA we've been following for decades. I think it's just reflecting the DBA is reflecting the big bullish stuff. I don't think they're trading it live today. Oh yeah, I guess I can see it. Yes, they are. See, it's down. There it is today. Right there. So they're putting pressure onto the grains and so forth. Well, again, it's such a thin market. We're going to send out charts this evening or this afternoon, but overall, we just don't have a lot of confidence that it means a lot. We'll see what it does Sunday, Monday. Sunday, Monday, Tuesday. Let's see what that is. Went to, okay, what on the cream? Let's see. So let me just say okay. There we are. All right. So yeah, that's that is really the action of it all in the end. Is that the grains are feeling it. You can see that they're knocking it down. Now the question is, how will they look Sunday night? I mean, really, that's what it really comes down to. Is that we can't take this too serious, as much as it's a big number. But without a doubt, it's definitely something to look at. So the Brazilian real is moving down, right? Let's just double check that again. And the grains are doing the same thing. Right there. Yeah. So the pressure's on both of them. And I guess what else could they do, there's no other reason to really take it much more serious than that. All right. I'm trying to think what else we need to look at. Anybody else see anything? Oh, AUD. Let's take a look at it. Let's see. AUD. I did see it down still for what is it? Where is it? I have the fact check spreadsheet filled in. I filled it in. Where's it at? Let's put that up there. Here it comes. And I'll put that in too at the same time. Right there. We do this. Save workspace. Save workspace as. Save. There we go. And then close it. There we go. Close. And there it is right here, the AUD. There it is. Yeah, see that's still moving down. Where is it at? It's line 12. We are 7 days now in the daily sell, and we are definitely one full week in the weekly sell, going on a second week in that weekly sell right there. Circly thing here. So there's the Aussies having its issues. And what else do we got going on? We've looked at some of the others. I'm trying to think what product we haven't looked at that's analogous to. We saw the Canadian dollar. Take a look at the New Zealand CAD. That's a good. Oh, here's Robin. Entire stock market dives. Other commodity markets have broken down as well. Yeah, I bet. You take a look at the charts. That's cool. Thanks. What do you think? I'll tell you, Sunday night's going to be interesting, and the close of the day too. If they bring this thing back anywhere from 30% or better, you have to be wondering what are they going to do Sunday night? Another 30%. Next thing you know, you're only down 30% from Wednesday. And everybody's going like, wait a minute, didn't I just short that thing thinking the world's coming to an end? Hold the door. I'm confused. Why does it do that? I mean, really. And it doesn't seem to stop, It's consistent over and over and over again. They keep on doing the same thing and they never let it go. And you have to wonder, when is this quantitative world going to come to an end? Good point, Robin. Thank you. Definitely. Yeah, I mean, we've seen this too many times. I think I put charts up already showing you that this thing, on thin opportunity, they find a way to try to shake it up. They put out a story about COVID. Again, you know, always got to have a story with COVID, you know, to try to scare the masses. And then, you know, justifying the slide, some try to get out, and then all of a sudden inventory is not anywhere to be found anymore on the sell side, and everybody starts buying them again. And it just does not give up. All right, traders, like I think that's about it. Unless anybody wants to see anything, I think we are done, and done. So for those that are subscribers, we'll be putting out charts at the close of today in the U.S., which is early. We only have a half a day today, so it'll be interesting to see how it all plays out. Happy trails to you until we meet again for a second Friday of this week. Wednesday was the Friday, and today's a Friday. Happy trails to you, to all our trading friends. See y'all on Sunday night, traders. Ta-ta for now.